All right, I want to take a look at silver today. First thing, though, I'm going to take a look at the dollar chart here. It's doing what I was expecting. Um, this this support zone here on these two pivots, here and here, major support zone. That was the spot where I was expecting the dollar to maybe rally out of a daily cycle low. That looks like what is happening here. But my expectation at this point is that this daily cycle is going to left translate and then move down into a deeper intermediate cycle low. So we'll kind of see how this is unfolding. Now, you would expect that this is going to pressure commodities and especially metals, and this is kind of what I want to talk about today. And there was a major attack on gold this morning. So let me go over to the silver chart, because that's kind of what I want to look at. All right, so here's silver, and we would expect that there would be the metals would be down, and they were this morning. There was a large attack this morning that drove both silver and gold down, and mining stocks. But they have since come back. Gold, I don't think, is quite positive yet, but silver is. And then the interesting thing is that silver made a higher high. So it is rallied above this peak. That is a sign that the asset is probably in the advancing phase of an intermediate cycle. When things are making higher highs and higher lows, that's a sign of an intermediate advance. Also, we have the characteristic momentum. RSI has bounced very quickly out of this oversold condition. I advised people to, add to their physical silver right back in here. This may turn out to be one of my better calls ever. I think we may have gotten in pretty close to the bottom. Again, I made that same call back in here when we got this pullback that now might be a good time to add to your physical silver. I have also noticed that at some of the metal dealers that were starting to get sold out on a lot of their silver stocks. So I think there is a reasonable scenario that perhaps the constant and almost non-ending manipulation of the metals market, especially silver, has created a shortage in the silver market, and now that shortage is going to break the manipulation. It's starting to look that way with this higher high, despite the dollar rallying and despite interest rates moving up. I actually don't think interest rates really control the metals that much. I think it's more driven by the currencies, by the dollar index. But the fact that the dollar is up pretty strongly today and silver is breaking out to new highs, and it's doing it fairly late in this daily cycle. So this is potentially right translating this cycle and indicating that this is potentially an intermediate cycle low. All right, so let me widen the chart here a little bit, and I'm going to float the idea that maybe we did complete the 8-year cycle low for metals back here, and the metals are setting up for the advancing phase of a new intermediate cycle, and one that may break out of this long sideways consolidation in silver and that handle of that really large cup and handle pattern in gold. And so what happens when you get into something like this, and I'll show you the same thing that's happened in energy stocks and also is happening right now in stocks, is that your typical novice retail trader, even most hedge funds, unfortunately, they have to report every quarter, so they're kind of forced into chasing momentum, which just means they underperform the S&P consistently year after year. But the typical novice trader does the same thing. They're always jumping from one thing to another. They're always chasing momentum. The problem is that you don't know it's momentum until it gets late the cycle, and then so they end up chasing the momentum late in the move. Then they get caught when the momentum runs out, and then they, when the asset starts to move back down, then they end up getting knocked out for losses. So, I see this all the time. It's just a characteristic of novice traders, and like I said, even most hedge funds will do this. They're constantly chasing momentum, so they constantly underperform. They're constantly losing money. They're constantly jumping from one newsletter to another, whoever happens to be touting the latest momentum move. So they never really have any chance to make money, and most hedge funds have no chance to ever outproduce the S&P simply because they are forced to chase momentum in order to look good on their quarterly reports. Of course, that's not how you make money. The way you make money is you buy at bottoms when no one wants the asset. But if you're a novice retail trader, it's very hard to do that. Your emotions won't let you do that. You want to make money now while everybody else is making money in the momentum sector. Or if you're a hedge fund, you just can't report a quarter that shows that you're in metal stocks while Bitcoin is soaring. So I'm going to say traders, gold bugs in particular, have gotten very despondent. Nobody wants to trade metals anymore, and it may be that now is the time to trade metals. I think it's definitely a time to buy physical silver. With physical silver, you could easily hang on through this entire mess if you have most of your metals allocation is in physical silver. You're not going to get kicked out by any of this stuff. If you're trying to trade the wiggles back and forth, and you're watching your value of your portfolio go up and down, you're probably selling it at these lows and buying at these highs. So that's why I have at the point that I recognized that this was just going to be untradeable and a churning mess, that's when I strongly started suggesting people just buy physical silver. That will get them through this mess, get you out the other side where you are going to make a lot of money. Now let me go to energy. And I'm just going to touch on these real quickly. Kind of the same thing here with energy. I recommended just buying XLE and hanging on back here in December of last year. I knew, energy, oil in particular, doesn't lend itself very well to cycle analysis. The cycles are erratic. They don't adhere to normal timing bands very well. So I knew that we had started a secular bull market when oil went to negative $50. That was the bell ringing that the bear market was over and a new bull market was starting. And we got our first leg up, and then we got the corrective move down. And once that corrective move was over and it became apparent we were starting the next leg up, that's where I told people buy and hang on. Ignore the wiggles. And those people that have done that are now sitting on some really nice profits. And they have they're not paying any taxes, and they're getting dividends. XLE has a nice dividend. I think we have probably 4 to maybe even as much as 6 or 7 more years to go before this is done. So by the time this is done, I think these XLE positions, if you did what I told you, you bought and held on, I think you're going to make a lot of money in these XLE positions over the next 4 to 8 years. The people that are trying to trade in and out of this mess, they're just losing money. Now, real quickly, let's take a look at stocks. All right, this is the NASDAQ. This is where the innovation is going to occur. If we're going to have a bubble, this is where it's going to be at. Same thing's happening. People are becoming despondent. They don't believe there's any scenario where the stock market can recover. This has been going on for almost 2 months now. People aren't willing to buy now. All they can see is downside ahead. And again, they're going to be wrong. We're getting pretty late in this daily cycle. This intermediate cycle is starting to get kind of late. So at some point here, maybe the end of this week, maybe early or mid next week, we're going to get an intermediate bottom, and then we're going to get another leg up. So, the retail traders and hedge funds are making the same mistake here that they have been making in metals, and the same mistake they made trying to trade the energy stocks. Now they're going to make that same mistake again in the stock market. You're about to get a great buying opportunity here, and that will get you positioned for the next leg up. These sideways consolidations resolve to the upward direction when you're in a bull market. Here was another one of these difficult sideways periods. Here was another difficult sideways period. We got one right now. It'll end, and then the market will go back up, and then the retail traders will want to come in and buy when we're up here around 17,000 instead of down here at this intermediate cycle low. So potential brewing here in stocks. The energy market is already running. Just hang on. You got another 4 to 6 years to go on that, and I think we may be setting up for a breakout in the metals market, based on the size of this sideways consolidation. Once the breakout occurs, it should be a huge move. So, of course, the first thing is to beat off and fight off the manipulation that's going to try and take the metals back down here. Then silver has to get through this 200-day moving average. Then it has to make a higher intermediate high. Once it does that, we're on our way, and it's game on.